All right, good evening everybody and happy Saturday. Hopefully everybody's weekend is off to a great start. It was an absolutely gorgeous day, beautiful day here in Miami. It was about 90 degrees, bright sunshine. Although the clouds did roll in right around 3 to 4 o'clock, which was quite nice. But tonight, everybody, August 27, 2022, we are going to be talking about Fed Chair Jerome Powell's speech at Jackson Hole, Wyoming. Now, I know we didn't have time to do a live stream on Friday, so we will be making up for lost time tonight. We will be doing an in-depth analysis and a deep dive into the one and only speech from Fed Chair Jerome Powell. Now, there's a lot to unpack here. There's a lot of things to take in, and I think the overarching theme of that particular speech is that the Federal Reserve is going to be unrelenting at getting the job done of killing inflation. Now, there's many analysts on Wall Street, many portfolio managers that are having many mixed emotions and mixed signals about this particular speech, but I actually support Fed Chair Jerome Powell and pretty much agree with the majority of what he said, right? So I think the overarching theme of the particular speech is that we can't repeat the same mistakes of the 1970s. So we're going to go into talking about some of the history of monetary policy in the 1970s and 1980s. And essentially, Jerome Powell doesn't want to do a repeat of the mistakes that we saw when it relates to monetary policy in the 1970s, when we had a pretty big spout of stagflationary environment here in the United States. And that was really due to a couple things. So the central bank at that time had monetary policy that was oscillating back and forth between should we raise interest rates just enough to kill inflation, but not enough to send the economy into a recession while still increasing economic growth. But at the end of the day, I think this reverts back to that old saying, is that you can't have your cake and eat it too, right? So what we saw back in the 1970s, as Jerome Powell alluded to during his speech, is that we need to either go all or nothing. You either need to go all or nothing. So what that means is you need to either kill inflation, you need to crush it by raising interest rates and then holding them high for a certain period of time, or you can't do anything at all because you're going to repeat the same mistakes of the 1970s. So we'll talk about all that good stuff tonight. Markets obviously got absolutely hammered on Friday after the speech, mainly because it was a very, very hawkish speech. Okay, so if we look at the bond market, we had a big sell-off in that bond market. As we understand how bonds work, there's an inverse correlation between the prices of bonds and yields. So you saw yields absolutely go to the moon. So we are now well above that 3% on that US 10-year Treasury. We saw technology stocks getting absolutely hammered. On Friday, the S&P was down big, NASDAQ was down big, Dow Jones Industrial Average was also down. So we're going to talk about all of that today. We're also going to go into a brief explanation of why tech stocks tend to sell off a little bit more when interest rates are rising. But everybody, the most important part of the stream, we have to say what's up to all of our viewers in the chat. Hopefully everybody had a good Saturday. I had a really, really good Saturday. It was absolutely beautiful here in Miami, Florida. Brian is here. What's up, Brian? Good to see you. Sadiq. Rahman is here. Says, hey, Tom. Good to see you. Lynn says, hey. Tone Rick. Welcome, my friend. Jonathan Richards. Long time no see. Good to see you, my friend. Happy Saturday to you. This is a great evening, Tom, and hope you had a good weekend so far. I did. Vinny Castellano, the one and only, from Staten Island. Vinny, tell Maria I said hello. Hopefully you guys are doing good on this beautiful Saturday. So I actually went to North Beach today. So I took the bus. I took the, what's it called? The H bus over to Sunny Isles Beach, and then I jumped on the S bus to about 72nd Street. That's actually one of my favorite neighborhoods, favorite locations in Miami, for a couple reasons. So if anybody's interested in visiting Miami, Florida, you don't really want something too crowded with a bunch of tourists. You don't really want a bunch of wild partying college kids. I think 72nd Street, North Beach, Miami is probably the spot for you. So I spent a lot of my time reading, hanging out tonight. So It was good. Awesome weekend so far. It's good to relax. I see, hey, Solo 401, what's up? Solo, long time no see, my friend. Hopefully you are well. Always a pleasure to see you. Everclear 1102 says the market got absolutely hammered on Friday. It did get hammered, you're right. Look, but the overarching theme, here's what I like to say first and foremost, because I think my particular view is very contrarian to a lot of the other fund managers out there or analysts. I actually think Fed Chair Jerome Powell did the right thing. I think he did the right thing because as we talk about all the time on the stream, what's the actual job of the Federal Reserve? The job of the Federal Reserve is not to support the equity markets. Okay, the job of the Federal Reserve is to support price stability. And you know, even though Fed Chair Jerome Powell's speech was quite abrupt, I would describe it, I think he said all the right things because as we've had this rip-roaring rally on Wall Street off of the lows, there's been a lot of economists, a lot of analysts on Wall Street that have predicting a Fed pivot. And I think this really set the tone, this speech set the tone that, look, there's going to be no pivot unless we have concrete, conclusive data that inflation is actually turning for the better. And I think, you know, I took some notes on the speech. I wanted to go over a couple key things that Fed Chair Jerome Powell did say. But I think most notable during that particular speech is he said in order for the Fed to have any material actions towards pivoting, we're going to need more than 1 month's data that inflation is actually taking a turn for the better. So what does he mean? A decent, or earlier in the month, we got, I wouldn't say a good CPI print, but better than expected, right? So we have been seeing deceleration in inflation. Obviously, that headline number came down materially because of energy prices coming down. The price of crude oil has came down. The price of gasoline, thankfully, has come down. But as we review all the time on the streams, the Federal Reserve actually looks at core CPI, not the headline number. And core CPI is exclusive, or it excludes very volatile food and energy costs, right? So even though we're seeing inflation come down as it relates to energy, as it relates to gasoline and crude oil, well, the Fed understands that, but they don't really look at that as a key metric, right? They want to look at wage inflation coming down. They want to make sure that shelter inflation is coming down. And shelter, as we've reviewed many times, makes up about 33% or a quarter of the total CPI numbers. So markets definitely didn't like that, as Fed Chair Jerome Powell came out very, very hawkish, saying that they're going to do whatever it takes to get the job done. Right as he was speaking, I was watching the bond market, and man, that 10-year Treasury yield took off really, really substantially. So bond yields are up, bond price is lower, equity price is lower. We'll see what happens next week. Hey, Samantha R., what's up? Good to see you. Hopefully you're well. To an epic start. Good to see you, FredX. I think we actually just saw the Metro Mover go by here. There may be some sort of a concert going on at the FTX Arena, so we'll check that out today as well. I see RJ is here, says Olaf from Colorado. Gregory says, good evening all. Welcome, Gregory. Let me know if we're still buffed. Eve, but good to see you, my friend. We are overlooking the beautiful Paramount building here. Road Dog 41, welcome. New York Travel Diaries says, greetings from New York. Welcome to all of our New York friends. Hal T16. Nigel Dallas says, good evening, Tom. Google says, hey everybody, good to see you, Google. Days Work says, what's up, Tom? Good to see you, Days Work. Derek is here. FredX, funny. Let's cross the street. I want to show you guys the 1000 Museum. Kathy Lyons is here. Says, hey, Tom, and hey, everybody. Welcome. Good to see you. So check out the facade of the 1000 Museum building. It's one of my favorite buildings in downtown Miami. Right here on the corner of Northeast 2nd Avenue. V. Smith is here, says, hey, welcome V. Smith, Bagels and Walks. Sally, welcome, welcome. Christian, or Chris says, good evening, Tom, good to see you, Chris. Hey, Deuce says, hey, I caught you right on time. Thank you for being here. Jamie Massetti says, Tom, it seems the market does better with Republicans in government. Well, funny enough, actually, and I don't really want to get too political on the stream because it's exhausting and I'm trying to relax on Saturday. But historical data shows that the markets actually perform better under Democrats. Now, I'm not a Democrat. I tend to lean more conservative. But now that we're going into midterms, I would just like to reinforce one particular concept that I think we should all be looking out for as investors. So this research actually comes out of Fundstrat, which is Tom Lee's, and I respect Tom Lee or Thomas Lee very, very much. I think he's one of the better analysts out there on Wall Street. So we could potentially be heading into one of the best scenarios for the stock market after midterm elections roll through. Okay, now why is that? So if you look back throughout history, the political environment in which the stock market or the equity market performs the best is you have to have two key things happen. Okay, and the first key thing that has to happen is, number one, is a Democrat or a Democratic president, which we have right now, Joe Biden, whether you like it or not. And number two is when the Republicans control both houses of Congress. Okay, now we've reviewed this many times on the stream, but it's very, very critical and important to review it again because we're coming up very, very close to midterm elections. I think we got the Metro Mover coming here. Now, we could ask ourselves and debate all day long about why that is. You know, why do you think the equity market performs well when there's a Democrat as a president and Republicans control both houses of Congress? Now, if I was a betting man, which I'm not, I would say that Wall Street or the private sector in general likes a gridlock in the government. Because when there's a gridlock in government, nothing can get done. No new rules, no new regulations. And it's essentially will allow an easier type of business environment for forecasting, for business investment. So I think what could potentially be happening right now, and if you look back throughout history, this is actually pretty normal. The first 2 quarters of the year during a midterm election cycle always tend to be, I'm going to say about 90% of the time, equity prices are actually flat to lower. So the action in the stock market we're seeing right now is actually not an anomaly. It's actually kind of right on target with consensus. So just keep that in mind, everybody, not to get political, but we could be coming up on an instance here where it is the best environment for prices of equities. But check out the Freedom Tower right in front of us. The real boogeyman says, well, Tom, I think the equity markets will suffer all year long. Probably, yeah. Road Dog, good to see you, my friend. Estelle is here from Australia. Good to see you, Estelle. Estelle is joining us from Australia. So I took some notes here, everybody. If you haven't already, I would very, very strongly advise that you rewatch the speech that Fed Chairman Jerome Powell gave at Jackson Hole. So there was a couple key things that I think he said that were very, very telling. And I think that as the Federal Reserve has been watching a lot of the recent price action in the stock market, in the bond market, even in the housing market, I think the tone needed to be set, and there needed to be a stern tone that needed to be set. And I think Fed Chair Jerome Powell actually did a pretty good job setting that tone. Now, there's a lot of people that disagree, and they think that overall the Fed is doing something that's leading to demand destruction? To which I would say, of course. I mean, of course. Many people believe that inflation is mainly due to COVID-19, which I agree, is mainly due to the supply chain crisis. And yes, I would call the supply chain, I would label it a crisis, which I agree as well. But the Federal Reserve needs to do what it needs to do to really hone in on inflation. Now, again, going back to the point, many people and many economists and portfolio managers, analysts on Wall Street says, look, the Federal Reserve is overstepping their boundaries here because they're not understanding where all this inflation is actually coming from. The reason why we see all this inflation is because our supply chains are severely damaged. And we've seen this as we've been covering earnings season, because out of all the major companies, let's just talk about the tech companies when it comes to the manufacturers of semiconductors, tablets, smartphones, computers, you name it. What we're seeing is a big push for companies to domesticate their supply chains, so to bring manufacturing and manufacturing jobs back to the United States, because COVID-19 essentially taught everybody that supply chains are very unpredictable, especially if you have different rules, regulations in dealing with COVID across the world. Most specifically in China, right? When we've seen zero COVID policies shut down factory production at Tesla, at Apple, at some of the major semiconductor manufacturing plants. So I think that's why we're seeing this major push towards bringing supply chains back to the United States. So going back to my point, you know, I was watching on Twitter, and many portfolio managers on Wall Street were saying Fed Chair Jerome Powell did the wrong thing at Jackson Hole. He sent a message to the market that they're going to be way too aggressive in keeping monetary policy tight, and that's not going to do anything to help inflation, because inflation is caused by all of this demand or supply chain mishaps, which I do understand. But if you look back throughout history, what was the one way where we actually successfully solved inflation? And I would argue that goes back to, I'm wondering if I can cross here. It seems like, I always say, it seems like Miami traffic lights are like Long Island, where it's like a 50,000 hour traffic light. But I think we need to look back to Paul Volcker in the 1980s, right? So if you think about what happened in the United States in the 1970s, we had a period of a stagflationary environment. Hey, does anybody know who is performing at the FTX Arena tonight? So going back to my point about the 1970s, what we saw in the 1970s is a Federal Reserve and a monetary policy that was very on the fence. They didn't want to raise interest rates enough to kill inflation, because they thought if they did that, they would slow the economy. And Fed Chair Jerome Powell's point is like, that's exactly why we saw a period of stagflation, which is a period of increased inflation with decreased economic output, because we were sort of half-A-ing it, for lack of a better terms, right? And Fed Chair Jerome Powell is like, once the 1980s hit with Paul Volcker coming in, he was the only one who took initiative to say, look, it's either you go big or go home. It's either you raise interest rates in a big way and crush demand and really take care of inflation, or this is going to persist. And that's exactly what happened. So if you watch the speech that he gave, he said what the Federal Reserve is trying to do is not go down the rabbit hole of repeating the mistakes of the 1970s. So then we have to do what we did in the 1980s, which is jack interest rates to 20%, and that's really going to crush the economy. So in his view, if he continues to have the Fed raise interest rates at a steady pace and hold them there for a prolonged period of time, we can then be proactive on the situation and kill inflation. Now, what I would argue is that we should have done this about a year ago, and I think I've been saying this all the time on the streams, and you guys understand that, but I guess better late than never is what I would say. Hey, John says, Daddy Yankee hero in the Bronx, where I'm from. Good to see you, John. Welcome. Anonymous, is something going on at the FTX Arena? I think there's a concert going on here because I do not believe the NBA is in season yet. So I'm not sure what kind of concert it is. Hey Ahmed, good to see you. Dusty Cole says Tom. Road Dog says some places are still hiring. Yeah, I mean, I would say that the job market is extremely, extremely strong. And that's another thing that Jerome Powell stated in the speech. Hey, Kim says, oh my gosh, I was over there a couple weeks ago. Kim, good to see you. It seems like this concert is actually just starting. Samnito says, hello from Argentina, welcome. Oh, it's a Daddy Yankee concert. Very nice. You know, funny enough, everybody, usually once we end the stream, that's right around when the concerts are always getting out at FTX, and the traffic is crazy. I would even argue that the traffic is probably worse than New York City traffic after the concerts get out here at FTX. But this is my favorite building in all of downtown Miami. It is the Freedom Tower. Even though it's not the most flashy building, I think it just gives the city a lot of character and it has a lot of history. And it just reminds everybody that free market capitalism works and is the answer. And that if you want to come to the United States of America, if you want to work hard, you will be rewarded for your efforts. So, love this building right here lit up in red. One of my favorite buildings in the world. And my favorite building in downtown Miami. Hey, Jay is here, says howdy Tom, hope you're doing well. I'm doing really good, Jay. Had a pretty good day today. It was very good. Dan Zhang says, hey Tom, how's your weekend been? My weekend has been fantastic. I spent the majority of the day in North Beach, Miami, which is around 72nd Street to around like 80th Street. And I said this at the beginning of the stream, but if anybody's interested in taking a vacation to Miami and you want a place where it's not going to be too crowded with tourists and not too rowdy with spring breakers and all that, I would highly recommend North Beach. So there's a community that is called, I'm sorry, man. There's a community that's called Normandy Shores or Normandy Isles. And I was actually looking to acquire some real estate on that particular island, 2016, I'd say. That is probably my favorite neighborhood in all of Miami, Normandy Isles, Normandy Shores. But if you cross over the intercoastal there, you will reach the community of North Beach, which is pretty much like a hidden gem of Miami. I love it. Yeah, Kim's like, yes, 72nd Street, love it. 72nd Street is fantastic. So I guess it depends on what you like, right? I mean, many people come to Miami because they want to party in South Beach, which is cool, I get that. I mean, my speed is sort of more mellow. So if you want like a nice clean beach, not too many tourists, like a lot of residential, you know, family type activities, I would definitely check it out. Hey, Mark Sage is here, says, hey Tom, good to be with you tonight. Likewise, Mark. Mike Cease is another big drop in the markets next week. Well, I mean, it definitely is possible. So that brings me to my point, Mike C, of don't fight the Fed. So there's three particular individuals that I always talk about on the live streams. And I think you guys could pretty much recite them without even thinking about it. But for argument's sake, we'll just state them again. So number one is Paul Tudor Jones. So Paul Tudor Jones is one of the most successful traders, I would say intermediate term trend traders, macro guys out there. Then Stanley Druckenmiller, which I think is probably the greatest investor of all time. And then you have Ray Dalio. And the one thing that these three particular investors have in common is their famous saying of don't fight the Fed. Okay, so if we review what that means, don't fight the Fed essentially means when monetary policy is in a tightening phase, which means the Federal Reserve is unwinding their balance sheet, which is made up of mortgage-backed securities and U.S. Treasuries, and when they are raising interest rates usually you should not be long the market when we are in a position of quantitative tightening, okay? Now, I'm not telling you guys what to do. All I'm doing is just stating that particular fact. And if you go back and rewatch Fed Chair Jerome Powell's speech at Jackson Hole on Friday, it was pretty hawkish, right? Excuse me. He essentially is saying they are going to do whatever it takes to kill inflation. And one CPI print that is looking like it's moving in the right direction is not going to be enough for the Fed to sort of take their foot off the gas as it relates to rising interest rates and unwinding their balance sheet. So, I don't know, what do you guys think? Do you think that statement rings true, don't fight the Fed? Or do you think this is another one of those situations where the Federal Reserve is sort of gaslighting the economy? What do you think? Hey, Tucson is here. This is Happy Saturday from Tucson. Welcome. Tucson, we're outside of the FTX Arena. I believe there's a Daddy Yankee concert going on, according to the group. Hey, Steven says, hey, Tom, good evening from Guatemala. Welcome to all of our Guatemalan viewers. Good to see you. Ren 10 says, Tom, never fight the Fed. I think I'm going to have to agree with you there. I think I'm going to have to agree. Tess Stickles says, happy Saturday, Tom. Welcome. Good to see you. Happy Saturday to you, too. FredX says, 1, don't use Robinhood. 2, we hate SPACs. 3, don't fight the Fed. Wow, that's actually a pretty good slogan for the Walks on Wall Street stream. Now, I will say maybe I shouldn't be too harsh on special purpose acquisition companies. Now, I think the vast majority of them, I still hold strong when I say the vast majority of them are no bueno, not good. But there are some SPACs that are okay. But the vast majority of them are just another way for Wall Street to, make money. Hey, Denise is here. Says, hey, Tom. Charlie Richardson. Welcome, Charlie. Good to see you. Shala says, I think Jerome should have said all this earlier. You know what? So first and foremost, I apologize if I'm pronouncing your name wrong. I do apologize for that. But I think I agree with you 100%. So I'm not sure if you guys joined the live stream on Thursday, but we were talking about a very interesting and important interview that was aired on Bloomberg, I think Thursday around 3 or 4 o'clock, I forget. So if you type !Fed, F-E-D in the chat, I want everybody to take a couple minutes and watch this particular interview. Now, they were interviewing one of the greatest economists, I believe, of modern times, which is Dr. Mohamed El-Erian, okay? So Dr. Mohamed El-Erian is an extremely well-respected economist on Wall Street. I've been studying him pretty much since I was in college. I've learned a lot. I think he's probably the number 1 or number 2 guys that whenever he airs on CNBC or Bloomberg, I tend to stop everything that I'm doing and pay attention to what he says. I think he's a brilliant guy, Dr. Mohamed El-Erian. So once again, if you type !Fed, F-E-D in the chat, take some time and watch that interview. I think you're going to learn a lot. And it goes back to the comment that I just read in the chat, that the Fed said all the right things today, but they should have been doing that and saying that 12 months ago. Okay, now if we remember the narrative of 6 to 12 months ago, it was, oh, inflation is transitory, we don't need to get super aggressive of raising interest rates because the only reason why we have inflation is due to the pandemic and supply chain. It's not because we printed all this money. We're only going to have about 3 to 4 CPI prints that are really hot, and then everything is going to come back down to earth, which I think I and everybody in the chat has strongly disagreed with ever since they said that. We all knew that inflation was not going to be transitory. We all knew that was going to be a load of BS. So, I mean, here's what I say. I say better late than never, right? Many people want to dump on Fed Chair Jerome Powell and demonize the guy, but look, what happened, and I think we still have time to course correct. So better late than never. I think he needs to get hawkish. I think we need to keep interest rates at an elevated level. I think we need to stop this whole interference where the Federal Reserve has changed their mantra from price stability to supporting the equity markets. I think we need to reverse that course and go back to what the Federal Reserve is supposed to do, which is price stability. It's not supposed to be S&P 500 stability. It's supposed to be price stability. So I think I agree. Hey, Ed Dunkel, what's up? Says Powell felt that China would get their act together, but they didn't, says Ed. Yeah, that's also true. Ed, I'm not sure if you just joined, but we were just talking about how a lot of US companies are starting to bring back manufacturing capacity to the United States for that particular reason. Now, I hate saying that COVID was a positive because we all know COVID-19 was horrible. It was an extremely deadly disease that killed millions of people, but I think out of every tragedy, something positive happens. And I think the main positive that came out of COVID was to signal to the marketplace and major companies that, look, you need to have full control over your supply chains, because it only takes one country to say, nope, we're closing down everything, we're locking down everything, you're not allowed to operate this particular factory at 100% capacity, and that could absolutely wreak havoc on revenues and corporate profits, which it actually has. So over the course of this past earnings season, we've seen Apple, we've seen Taiwan Semiconductor, Intel, start to transition a lot of their manufacturing capacity abroad and bring it back to the United States. So I think that is a positive, and I actually think by doing that over the long term, that will help out with inflation. That I do believe. Yeah, Daryl, it's horrible. I agree. We will. So just a quick announcement, everybody. We did have a viewer of the Walks on Wall Street stream unfortunately pass away. I believe it was 2 or 3 days ago. So our good friend Fang, he was always in the chat, always a really positive guy, always super insightful. So, it's unfortunate and it's terrible, but we'll do the streams and we'll continue to truck on, because I think that's what he would want. So anytime we have somebody that's a member of the streams have something terrible happen, it's definitely a little depressing, but yeah, definitely in my thoughts and prayers all week for sure. So this is the torch of friendship. Now, I think there's multiple of these. Let me see. Denise says it has a lot to do with trade that was very hacked and hostage. Yeah, the mail was also messed up too. Yeah, Bernard, I know it's a bummer, man. Purple Frog, sorry about that. Says, hey Tom, why does your job have you travel so often between New York City and Miami? Well, I think we have to go back to my existing book of business. So a lot of my clients tend to have operations in New York City. I think it may start to pour rain in a minute here, everybody, just to let you know. But so I mainly tend to sell into the healthcare vertical. Now I have other clients in other departments or other sectors, but if you think about home healthcare, nursing homes, hospitals, New York City in general is very, very big in the healthcare. And the Northeast specifically has some of the best healthcare in the world, not only in the nation. So that's sort of what has brought me there. I will say during the pandemic, we saw a massive explosion in M&A activity, or merger and acquisition activity, in the healthcare space specifically. Now, I think I'll go into that because it's a good segue into another topic I wanted to talk about. So a lot of the very, very well-capitalized home health care agencies, hospitals, and nursing homes during COVID, they had a very, very lucrative opportunity to buy out or acquire some of the less capitalized or well-capitalized businesses. And a lot of them happened to be here in Southern Florida that were good acquisition targets. So a lot of my customers that are home health care agencies now have massive business operations here in Miami, Fort Lauderdale. I would say for obvious reasons, because there's a big retirement community here. So that's probably the number one reason why I'm back and forth so much. Another thing I'll say, everybody, in relation to M&A activity or deal flow. So there was an article that came out in the New York Post, I believe earlier today, and the article was saying that Goldman Sachs is experiencing a wave of people quitting after they found out that their bonuses were not as big or as lucrative as last year. So I was reading the article and I was doing some digging into it, and I think the article is a little bit over-exaggerated. Usually during bonus season, investment banks tend to have a pretty normal amount of turnover. Especially this is the time of year where private equity and venture capital firms tend to recruit and headhunt investment banking analysts and associates. But I think if we understand how the investment bank works and the model of an investment bank and how they make their money, it shouldn't be to anybody's surprise in investment banking if you got a smaller than expected bonus this year. And the reason for that is because if we think about what happened in 2021, we saw an absolute explosion in deal flow. Okay, so we saw massive amounts of companies going public via initial public offering or IPO or SPAC. We also saw a record number of companies going public via SPAC as opposed to IPO, so special purpose acquisition company, and the M&A business or merger and acquisition activity was massive in 2021. Fast forward to 2022, well, IPO activity is down 97%. Okay, so usually when the Federal Reserve puts tightening on monetary policy, a lot of the deal flow dries up. So less companies go public. That means less revenue or equity underwriting revenue and profits for the investment banks. So if you know that deal flow and you know that companies that were becoming public via IPO or SPAC is down 97% year over year, well, if your bonus is a lot less than in 2021, it's pretty obvious why, right? So I don't believe the narrative that there's this massive exodus from investment banking, because if you actually look at the data, there's never been more people applying to work at the investment banks in history than there are right now. You're always going to have that normal amount of turnover, but if somebody is not happy with their bonus this year, well, it's because last year was a huge anomaly and you essentially had 5 years of deal flow compacted into 12 months. So just wanted to bring that up here. But guys, now we are at Bayside Marketplace. Mike C says, can't imagine leaving a dream job like Goldman Sachs over one raise or one bonus. Yeah, so Mike C, I think the way the article positioned it, I think the person who wrote it, I don't know, I think it was a good article, but at the end of the day, around bonus season is when a lot of people quit anyway, right? Because they want to take their bonus and run. Why would you quit before the bonus, right? Just think about the logic of that. If you were going to quit your investment banking job, would you quit 2 months before your bonus? No, because you're not going to get your bonus. You're going to get the bonus and then make the decision to leave or not. And also, this is the time of year when, let's say if you're an investment banking associate or something like that, a lot of the private equity firms or venture capital firms are headhunting you to go work there as well. All right, so we are at Bayside Marketplace. Hey Tess, good to see you. GX72 says, hey Tom, did you go to Joe's? I'm going tomorrow. So I will be at Joe's tomorrow. I actually went to North Beach, Miami today. Miss Brown Eyes is here, says happy Saturday. Good to see you, Miss Brown Eyes. Hey, the Bandits, there's no restaurants, no nightclub tonight in Miami. Lena Sandoval says, hello Tom, good to see you. Hey, Jason Francis is here. What's up, Jason? Welcome, my friend. So if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and subscribe to the channel if you are new. The theme or the topic for tonight's live stream is the Federal Reserve speech at Jackson Hole. We reviewed that a little bit. Hey, Austin City Limits says, hey Tom, is it humid there? It was pretty humid today. It was pretty humid today, but not as bad as earlier in the week, to be honest. Usually once the sun goes down around like 8, the humid really breaks and tends to break quite hard. Hey, Omar MD says, hey Tom, good evening. Good to see you. It's good to see you as well, Omar. Thanks for joining. So I want to read you something that Fed Chair Jerome Powell said during the speech. And I think it's very telling of the future of monetary policy. So he said, we will keep at it until the job is done, end quote. While rate increases will bring down inflation, they will also simultaneously bring some pain to households and businesses across the United States. Those are the unfortunate costs of reducing inflation. A failure to restore price stability would mean far greater pain. So that is a direct quote out of the speech that Fed Chair Jerome Powell gave, and I think he is 100% spot on. I would agree with him 100%. Because essentially what he's saying is if we don't get inflation under control, the ramifications of that are going to be far worse than any sort of layoff situation that could happen or any sort of equity valuations that go down. Because as we've reviewed on the stream before, the reason why inflation is so dangerous is because wealth inequality has grown extremely, let's just say common in the United States. So if you have the vast majority of the country living on a fixed income or a stable income with high expenses and very few investments, well, the problem with that is if the prices of food and energy continue to go up, if the price of shelter continues to go up, the average American family can't deal with that. But the wealthy Americans who have assets that are appreciating can. So the trade-off there would be, let's have a temporary pause in the acceleration in the prices of assets. So I'm talking about equities or real estate. Even if they have to come down, if that means getting inflation under control, we'd much rather protect the vast majority of Americans and bring price stability back as opposed to just being a cheerleader for the stock market. And whenever the stock market goes up, it really does no good for the average individual here. Now, I know many of us do own stocks, but not to the degree that the top 10% of Americans do. So if you do the math, I think Fed Chair Jerome Powell really hit the nail on the head here to say it is more important to solve inflation than to be a cheerleader for the stock market. Hey Gary, good to see you. Gary Carpenter, good to see you, my friend. Hey Jim Wolf, welcome Jim. Let's see if we see any dolphins in the water tonight. Hey, Gregory is here. What's up, Greg? Good to see you. Hey, Willie says no debt, no problem. What's up, Willie? Good to see you. Hey, Myra King says good evening, Tom. Good to see you, Myra. Welcome. Destructionist says happy Saturday, everybody. Just going to be popping in and out of the stream tonight, but wanted to say hello. It's our last few days of summer holidays for us. Been a few busy days. Yeah, I completely forgot about that. So summer is coming to an end, unfortunately. So next weekend is Labor Day, right? I think next weekend is the very famous Labor Day weekend. So we'll be back in New York for that. Well, hopefully we'll be back in New York for that. Andy is here, says, hey Tom, from the one and only South Korea. Good to see you, Andy. I know, Tess is like, I want summer to last forever. I do too. I think that's one of the reasons why I moved to Southern Florida. So anytime it's, snowing or anything like that in New York, we could definitely, just come back to Miami, Florida, which is always nice. All right, let's see if we could see any dolphins here. Mike C says the best party place in Miami is wherever Tom is at. Appreciate that. Hey, Michelle K says, good evening, Tom. How are you? I'm doing good. How are you, Michelle? Here Now said, the sign said ice cold beer $6. Wow, that's expensive. San Miguel. Ed Dunkel. So Bernard says, Tom, where is your yacht? It's funny, I don't do well on boats. I'm not a big boat guy, not a big car guy. I actually tend to get quite seasick, so I usually don't go on boats. So I wanted to bring this I wanted to bring this up. I didn't want to touch on it too much on tonight's stream, but I just thought it was, we'll actually go this way now. We always go that way. I thought it was rather funny. So there was an article today in the Wall Street Journal that was covering all of the, the PPP money and the COVID money that was given out. Remember how we predicted that disaster? Well, it turns out it actually was an unmitigated disaster. So the Secret Service just seized about $286 million of stolen COVID-19 relief money. And they estimate that overall, the fraudulent money that was obtained for the COVID relief or the COVID-19 relief program is going to top over $100 billion. Again, I'll say that again. The Secret Service estimates that the overall fraudulent activity, or the money that was given out to fraudulent enterprises or individuals, is going to exceed $100 billion. Not $100 million. $100 billion. I mean, talk about an unmitigated disaster that is. And this is why I started laughing. And let me know if you guys agree or disagree, but this is why I started laughing here. Because I remembered back to when everybody was railing on Elon Musk for buying Twitter. They were like, oh my God, Elon Musk is going to spend $6 billion to buy Twitter. What a selfish person. For $6 billion, we could solve world hunger. And it got to the point where the director of the United Nations actually tweeted, if Elon Musk gives us $6 billion, we could solve world hunger. Which is total propaganda and a lie, by the way. And the reason why we know that it's total propaganda and a lie is because we just printed $100 billion and gave it to fraudsters. And they claim that we need $6 billion to solve world hunger. We just printed $100 billion and gave it to people that were doing nefarious activity. So my stance is, if it's actually possible to solve world hunger with $6 billion, I would say fire up the printing press right now and print it. But that'll never happen because it's fake news. You can't solve world hunger with $6 billion. I don't know, I just thought that was interesting. There was an article in the Wall Street Journal today. I think that's just such a travesty to the United States and an embarrassment that we wasted $100 billion when we could have been giving that money to homeless veterans. We could have been giving that money to people that suffer from extreme health conditions. But instead, we printed that money and gave it to criminals. So. Hey, Jared Covey, good to see you. Dan Zhang says, I feel like our government never spends money for real issues. It's all smoke and mirrors. Yeah, I agree. Yeah, I don't know. I didn't want to harp on it too much, but I just thought it was interesting because I remember about a year ago there's a lot of people here today in downtown Miami. Denise says, so I watched this. Someone thought. June says multi-millionaire churches should pay taxes. Yeah, I agree. But the thing is, so my stance on taxes have always been a little bit unique, I think. Because at the end of the day, traditional conservatives are like, you know, no taxes, taxes are bad. So I have no problem paying taxes, and I've said this multiple times. But I think the worst capital allocators on the planet are governments. And it's not exclusive to the United States government. And this is incompetence from both the Republicans and Democrats. Okay, people in government in the United States are so glaringly incompetent that it's almost embarrassing. So the point I'm trying to make is it doesn't matter if you tax 100% of my income. There'll never be any problem solved because as the whole COVID PPP loan nonsense essentially proved, is that the government cannot allocate capital in an efficient way. If they let $100 billion of this COVID money go to criminals that were fraudulently distributed, what makes us think that they could solve world hunger? Or what makes us think that they can deal with healthcare and all these other problems? I don't know. I have no problem paying high taxes, but I don't have any confidence in the government to allocate that capital appropriately. Brian says politicians from both sides have a lack of understanding of economics. I agree. Well, I think the biggest thing, everybody, and let me know if you guys agree or disagree, I think that if you want to be a politician, I think it should be a requirement that you should have had at least one or two notable successes in the private sector. Because when you have career politicians, it's very, very difficult for you to make policy for the for the private sector if you've only ever been a politician. Does that sort of make sense? So I just think it comes from inexperience, maybe. Hey, Dan Zhang, so Tom, do you believe that a lot of the issues could be solved if it's being handled by private companies or sectors instead of the government? Yeah, maybe we should have a particular system. And again, I think you guys know me. I think I have a pretty open mind and pretty willing to try new ideas. I think maybe what we should do is have the government vote on particular companies in the private sector to allocate capital and resources and do things like that. But if we leave it up to the government in and of itself, it's going to turn into a disaster. I mean, and one of the biggest concerns that I have now, and I want to know what you guys think in the chat, it's a really, really big problem when we've become desensitized to billions, millions, and trillions. Has anybody sort of noticed that over the past couple years, maybe like 5 to 10 years? It seems like members of our government, like they have no concept of what money really is. Like we say, let's print up $1 trillion. It's only 100 billion. Like, for example, this is an absolute slap in the face to all Americans. If the Secret Service this week, they seized about $286 million worth of stolen COVID-19 relief money, and they estimate that all of the fraudulent money that was distributed is going to total 100 billion. 100 billion is, like, we've become desensitized to the value of 100 billion bucks. I mean, that's not chump change, okay? We could seriously do material good with that. I don't know. Anyway, I'll digress. Is it me, or does it seem like there's a lot more people in Miami tonight? Beautiful Tesla here. Love the color. I think that's one of my favorite colors of the Tesla. Sam Miguel says, you're right, Tom. Public officials don't act like private businessmen. Zabatata says, yeah, because PPPs were abused by the public sector. The PPPs were abused by criminals. And I mean, it was so glaringly obvious when the Trump administration announced the whole PPP thing. I knew from the day, I mean, anybody that has an understanding of anything business or finance, the second that they announced this thing, you were like, this is going to be an absolute unmitigated disaster. And rewind 2 years, it's been an unmitigated disaster. So anyway. Dan Zhang says, nah, Tom, a black Tesla at night under the lights looks so much more amazing. I kind of like the charcoal gray type color. I don't know why. I feel like if you buy one of the charcoal / gray color Teslas, even if it gets scratched up, you're probably not even going to notice a lot of those scratches, right? Hey, Omar, this is Tom. Any show at the AA Arena? I think there's a particular musician by the name of Daddy Yankee that is performing at the FTX Arena. Another thing that I wanted to note, let's think back to the Super Bowl. Now, I'm not a big football guy, but I always watch the Super Bowl mainly for the commercials, right? I enjoy it. I enjoy getting together with friends, family, watching the Super Bowl, watching the commercials. But this year's particular Super Bowl was very reminiscent of the year 2000 with the tech and telecom crash. And the reason why I say that is because, does everybody remember seeing all of those cringy cryptocurrency advertisements, like the one with LeBron James and a couple other celebrities? Anytime you see a particular, celebrity promotion of anything, that's probably a good signal that the party is wrapping up. Party's over. You should probably pack it up. So, and that was very, very reminiscent of 2000 when every single Super Bowl commercial was involved, like pets.com and this.com, that.com. So, they often say history doesn't, it doesn't necessarily have to repeat itself, but it definitely does rhyme. So I think that the spending on those particular advertisements were very reminiscent of the 2000s. Has anybody else noticed that? Would you agree with that? Hey, Sanjib is here. Good to see you, my friend. Welcome, Sanjib. Richard says, hey, Tom, the GDP of the United States. Yeah, I understand that, but at the end of the day, the point I'm trying to make is if we get conditioned that, $100 billion is negligible, it's nothing. Well, that 100 billion is going to turn into $1 trillion. That trillion is going to turn into 20 trillion. Right, bad habits tend to compound. Yeah, walking Minnesota is 100%. Crypto was everywhere. Irrational exuberance was at its fullest extent. So I'll touch on that and talk about that a little bit, and I'll give my take. Now, I have a very controversial take because I know there's many people out there that love all of the alternative crypto coins and all that stuff, but here's my stance. Over the long term, I am very, very bullish on the cryptocurrency space as a whole. However, I think there's massive fraud in the cryptocurrency industry as it relates to a lot of the alternative coins. I think the SEC is going to put its foot down hard, classifying all of these altcoins as securities. That's number one. Number two, once we get that regulatory clarity, as we start to see large institutional investors start to step up here and offer, let's say, Bitcoin custodial services to their clients, that is going to make it more real and adoption will actually probably take hold. So you guys know I tend to be quite biased, so take it with a grain of salt. I don't own any of the alternative coins, but I do own Bitcoin and a little bit of Ethereum. So the brand new news that came out from Coinbase partnering with BlackRock. So if we think about what BlackRock is, they're the largest institution by assets, or AUM, or assets under management. And for them to be partnering with Coinbase in order to provide custodial services of Bitcoin or trading services to Bitcoin in relation to their institutional clients, that's actually that's a big step in the right direction there. Okay. But I still think the missing piece that we have here, this is the Citibank Tower, by the way. I still think the big piece that we have that's missing is Gary Gensler's clarity or stamp of approval on what is green light and what's red light. And until we have that, I think that's going to slow down adoption. But definitely bullish news coming out. Definitely bullish news coming out. Step in the right direction, but hey, John G is here. Welcome, John. So this is the 200 Southeast Financial Center. So Ken Griffin, Citadel Securities, has now left Chicago, Illinois, and they are moving down here to Southern Florida. Now, not all of their employees are going to be moving to Southern Florida. A lot of them are going to be moving to New York, but their satellite office is actually located right here on the 20th floor as they await their main office being built. So let's cross the street here, everybody. We'll head towards the Miami Tower. Hey, LEEZ says there's a reason why Bitcoin is where it is and is valuable. Don't fall down the rabbit hole and be attracted to shiny altcoins that make massive moves, super high risk. I would agree with that. I think that everybody has their own value proposition to Bitcoin. I think I've stated mine before. So the only reason why I own Bitcoin is not really for speculative purposes. I find the value proposition quite intriguing that it is totally unconfiscatable. This is the Intercontinental Hotel, but I think it's broken. It used to have all the lights going all crazy, but I think it's broken. So I really like the value proposition of true unconfiscatable wealth. Right, I think Bitcoin is one of the only things that is truly unconfiscatable, regardless of its price. Right, so if I decide, okay, do I think it's worth it or beneficial to me to have about 5% of my overall net worth in a vehicle that is totally unconfiscatable? So it doesn't matter what lockdown, what government regulation. I can move theoretically any amount of money around the world just if I memorize my private keys, right? I could jump on an airplane, memorize my private keys, and in theory, bring $100 million, $1 billion across the border without anybody to say anything. So that alone, I find value in that particular proposition to allocate a portion of my net worth to Bitcoin, right? So that's me. I'm not like, people say, oh, it could go to zero. Yeah, sure. But from the research that I've done and my personal viewpoint on it, it has been awarded a particular percentage of my net worth. That's it. You know, I think people like, you know, we always talk about Peter Schiff. You know, if anything, funny enough, it was actually Peter Schiff's son's birthday yesterday. So big happy birthday to Spencer Schiff. Extremely smart kid. I think he's only 20 years old, but really smart kid. He's actually a good follow on Twitter. So if anybody wants a good follow on Twitter, follow our friend Spencer Schiff, Peter Schiff's son. You could also follow me at Walks Wall Street. I sometimes post some interesting things on there. But the point I'm trying to make is that Peter Schiff always gets into these arguments trying to convince people that Bitcoin is bad, and all these other people like Max Kaiser try to get into arguments convincing people that it's good. I think everybody should just make their own assessment and choice. You know, if you've come to the conclusion that you think it's a scam and it's not for you, then you probably shouldn't think about it. You probably shouldn't buy it. If you come to the conclusion that you see value in the particular vehicle for whatever reason, well, then make an allocation. I just don't think that there's any sort of good use of time to appropriate time to fighting and bickering about it like Peter Schiff does. But I love Peter Schiff. Love Peter Schiff. Love Peter. No hate on Peter. Yeah, Willie's like gold in the 30s. Hey, Dallas says, Tom, one press of a button and that, or Della's Lifestyle says, Tom, one press of a button that you don't control can wipe out Bitcoin. I don't know about that. Hey, Marty Lewis says hello, Tom and chat. Marty, any swimming today? Usually Marty is always joining the chat after her swimming sessions. Hopefully you're well, Marty Lewis. Good to see you. So everybody, I want to read you all another particular statement or a quote that Fed Chair Jerome Powell said during his speech. And I think it is very, very telling. And he said, and I quote, and this was during the end of the speech, he said, our responsibility is to deliver price stability. No, he said, excuse me. He said, our responsibility to deliver price stability is unconditional. And we are committed to doing that job at all costs. So again, our responsibility to deliver price stability is unconditional, and we are committed to doing that job at all costs. I think that was the exact, whoa, was that, you guys think that was lightning, or was that did anybody see that massive flash? I'm not sure if that was lightning or whatever that was. That was wild. But I think that was the appropriate thing to say for Fed Chair Jerome Powell. His job is price stability. The job of the Federal Reserve is price stability. It is not to be a cheerleader of the market. So I think if you have an allocation to equities, just understand the ramifications of that, right? Usually when interest rates are rising, what you'll see is valuations of tech stocks going down. And the reason for that, we've reviewed this many times on the stream, has to do with something called the discount rate. So as you're building, let's say a discounted cash flow model or something like that, let's say if you're an analyst, so you're just doing it yourself, as interest rates go up, the present value of those companies' future earnings go down. So for example, in an environment of artificially suppressed interest rates, when interest rates are really low, well, a lot of these very high beta tech companies go through something that's called a multiple expansion or PE expansion. So as interest rates are low and near zero, you know, as these companies focus on top line growth or top line revenue, their valuations can become very, very stretched. However, the moment that interest rates start to go up, you start to have what's called PE compression, okay, or valuation contraction, because the future value of those earnings become worth less and less as interest rates go up. So this is the Aston Martin building. The crane looks like it's hanging on by a thread on that building, doesn't it? Miss Bash says, is that place a restaurant? I'm not too sure. I think it's like a bar and lounge. It also may be like a hotel, potentially. Hey, Robert is here. What's up, Robert? Good to see you. Yeah, Austin City Limits is like, it's probably a UFO. Did anybody see that? It was like a massive, if you guys rewind the stream like a couple, maybe 30 seconds, you'll see a massive, massive flash of light. Now it may have been from like a party boat or something, but that was crazy bright. So now we are overlooking the beautiful Brickell Quay. Biz says, hey Tom, do you like gold and silver these days? So no, I tend not to. And there was actually a really, oh, I think it is lightning. Check this out. If you look right here, oh, Myra King says, hey Tom, it looked like it was lightning. I think you're right. So look, keep your eyes peeled right here. We're probably gonna see some amazing lightning strikes here. There was actually a really good article out of Barron's about 2 weeks ago that was talking about a particular bear thesis for gold. So I'm going to try to find that article and I'll post it in the Discord. But maybe I'll actually include it in my Behind the Street newsletter. So if you guys scan the QR code on your screen and punch in your email address, I will send you a free financial newsletter of all of my thoughts on the US equity market, on the emerging markets, fixed income, the bond market, all that. And I'll try to include that Barron's article about gold. But essentially the thesis around the Barron's article in relation to gold was that as the Chinese economy is slowing down, China makes up a very, very large portion of gold sales globally. So as China goes into economic contraction, especially surrounding their commercial paper market, it could definitely get a little bit kludgy here as we talk about gold, because a lot of the gold volume sales come out of China. So I'm gonna try to drop the link to that particular article. Brian's like, when is the newsletter coming out? There's going to be one 100,000% on Tuesday. 100,000% on Tuesday. I've just needed to get settled in. It's been nuts with traveling, but we're going to be back on track. I can assure you. So Tuesday, watch out for it. Hey, Biz is here. Good to see you. So Biz, if you type in Barron's China gold into Google, maybe you could find the article yourself. But I actually was reading that and I was like, you know what? I want to bring this up in the streams, but I completely forgot. So thank you for reminding me about that. But it was a really, really well put together article. It was in Barron's. I think this was maybe a month ago. Hey, MC Hammer says hello from the Netherlands. Good to see you. So check out the JW Marriott. Looks beautiful here. Yeah, the LT Prod says gold gave it all back. So a couple newsletters ago, I think this was a couple months ago, maybe 6 months ago, I had written that if gold cracks all-time record highs, I would get long and get long pretty aggressive, but I will not initiate a long position in gold until it cracks those highs. It never cracked those highs. And that's why you never want to try to front run a trade or anything like that. Because at the end of the day, I sort of have Warren Buffett's take in relation to precious metals. And that take goes something like this. Generally speaking, I want to allocate capital to companies that generate cash flow or spit off free cash flow. And if I buy gold, it doesn't really produce anything. It just kind of sits there, right? So that's one of the reasons why Warren Buffett doesn't own any, because he's like, why would I want to buy something that sits there, it doesn't generate anything, it doesn't make a product or a service, it doesn't generate revenues or give off any free cash flows, so why would I buy something like that? And I think I tend to agree. However, I do think, generally speaking, it should be a part of a diversified portfolio, which I get. But for me, since I'm relatively young, I'm not like super young, but relatively young, my allocation to equities is extremely, extremely high. And my allocation to precious metals is practically nothing. I own a little bit of physical silver, but mainly more as like a fun collectible type thing to do, not really as an investment. It really wouldn't move the equity curve at all if it went up or down. Michael Stein says it's like real estate without the taxes. Interesting to think about it that way, Michael. It's actually pretty interesting. But then again, real estate can spit off significant amount of cash flow. Yeah, line synced like Tom. The term young is relative. It is. Definitely is. Wow. So this is the City National Bank building, or the Miami Tower, one of my favorite buildings in the city. But if you guys are enjoying the live stream, oh, this is a nice Tesla here. Dan, that's your favorite color, the black. You know, after looking at it, not for nothing, that's actually I have to revise my favorite color. You know, I think I would still, if I had to choose a color Tesla that I would buy, I think it would probably still be that charcoal gray. I don't know. But if you guys are enjoying the live stream, feel free to leave a like on the video, subscribe to the channel if you are new. Two barnacles. David says live or recorded. Good to see you, David. MC Hammer says I have some friends living in Miami, in Brickell and Hollywood. Hollywood, Florida is beautiful, man. So Hollywood, I believe, is sandwiched right in the middle of Aventura and North Miami Beach. And, you know, I actually kind of want to, at Fort Lauderdale too, I think. No, excuse me. It's sandwiched in between Fort Lauderdale and Aventura, I believe. So Hollywood, Florida has some really, really nice beaches. I want to get up there and go, but I just haven't had any time to. But Hollywood, Florida is great. Love Hollywood. Hey, Perry is here. Says, hey, Tom. Welcome, Perry. Paulo says AMD and Intel for games. Well, I think Nvidia is more towards on the chips for games, aren't they? I think Nvidia has a stronger market share there for gaming. Wow, there was another lightning strike just right there. Dan Zhang says AMD for CPU, Nvidia for GPU. Yeah, so Dan, isn't Nvidia more along the lines of a bigger market share for gaming as well as mining? We're actually seeing some amazing lightning strikes here, guys. You seeing that? If you look right here, you'll see, and then right in this vicinity, you'll start to see them. Let's see if we can catch one more before we go. You guys just saw that? MC Hammer says, Tom, do you know the Fresh and Fit podcast? I think they are located in one of the taller buildings you are looking at right now. Really? I'm going to have to check that out. Fresh and Fit podcast. I've never heard of it. I'm going to have to check that out. That's cool. So they filmed the podcast right here. That's awesome. I'll listen to that. A lot of heat lightning strikes now. So we did get some economic data out last week from the Commerce Department. They reported Friday that consumer spending did slow in July, rising only 0.1% from June's 1%. Fed Chair Jerome Powell mentioned this during the speech and said, quote unquote, the economy continues to show strong underlying momentum despite mixed signals on growth. 1 month's improvement on inflation falls far short of what the Fed will need to see before we are confident that inflation is moving in the right direction. So I think that sorts of signals to the market that one particular CPI reading that's decelerating a little bit is not going to be enough for the Fed to take their foot off the gas in relation to increasing interest rates. So I believe the next Fed meeting is September 21st. You guys in the chat keep me honest, but I believe the next Fed meeting is September 20th or through the 21st. I believe we are going to get another 75 basis point rate hike. I think the Fed has made themselves very clear that they need to go big for a longer duration of time, or they need to go home. And when I mean go home, that sort of means we're going to have a 1970s style stagflationary environment. And Fed Chair Jerome Powell was very clear that they don't want to do that, okay? Because after a 1970s style in stagflationary environment brings about a 1980s style environment, and we don't need another Paul Volcker jacking rates up to 20%, okay? So if we can nip the problem in the bud now, we won't have to face the calamity of extreme high rates like we saw in the 1980s when then Fed Chair Paul Volcker came in and had to clean up the job of the former Fed chief that couldn't get the job done in the 1970s. So Fed Chair Jerome Powell said, "Our aim is to," I quote, "avoid the outcome by acting with resolve right now." So I can give Fed Chair Jerome Powell credit for that. Okay, I can give him credit. He's a day late and dollar short, but I try to be an optimist on these things, and I think that there's still time to course correct. So. Yeah, Davids is on that note, Tom. The markets are anticipating a rate hike. Wow, we're getting a ton of lightning strikes on the stream, everybody. I'm going to have to go home and watch the stream to see the lightning strikes. We'll see if we can get a couple more, and then we'll head out. But yeah, did you guys watch the bond market, or did you guys watch the 10-year U.S. Treasury yield during Fed Chair Jerome Powell's speech? I mean, talk about massive selling in the bond market. And as we understand that the prices of bonds move inverse to yields, yields went through the roof. Yields went gangbusters. So definitely putting pressure on the equity market as a whole. Ooh, I think we got one right here. Let's see if we get one more. And right now. Come on, we need one more strike and then we could head out. There we go, we got it. Hey, David says, man, that camera on that phone is great. What phone is it? So David, we are streaming with an iPhone 13 mini. Check out all of the traffic that is backed up going all the way from downtown Miami into Brickell. Now, we're about to walk into Brickell in a minute, but I have a feeling that Brickell is going to be extremely, extremely packed. Oh, and then we got the bridge going up. All right, we have to stay and watch what massive boat is going to come over here. I'm not seeing any boat on this side. Hey, Gene is here. Says, good evening, Tom. Hey, Gene. Good to see you. Happy Saturday. John is here. Welcome, John. David, how was your week, man? How was the start to your weekend? Oh, they can't. Look at all this. So they can't raise the drawbridge because look at all the cars on the bridge. That's crazy. All right, do you guys think we're going to be disappointed by the boat that comes over here? Or you think it's going to be one of those mega yachts with the helicopters on the top? Yeah, Ryan Royal's like the bridge closing. Sounds like the market's opening bell. It kind of does. Now, this time last year, we used to see that I think he was a Swiss billionaire. He would always have his yacht here with the helicopter on the top. That thing was ridiculous. I doubt it's going to be him. It's probably going to be one of those cargo ships, but we'll see. Line sinks is a boat carrying a container. Well, I guess we'll find out in a minute. There's definitely nothing on this side. Hey, Road Dog, says Tom, you rule. I'm going all in on puts, then I'm going to bed. Just kidding, great show, nobody does it better. Thank you, Road Dog, that means a lot. I appreciate it. Always a pleasure to have you joining the streams. I think we just got another lightning strike here. I think I could probably stand up on this bridge all night and just look at the view. Could you imagine having an apartment in one of the W buildings here? Have an amazing view all night. Brian says, Tom, what is the spotlight to the bottom? I'm not too sure. I think this just signals to the boats that they're getting too close to the concrete wall here. Hey, Cindy Foley is here. Good to see you. Yogi says, do boats have the right of way? Or do they have to schedule the bridge? I think they have the right of way. I think they signal to the gentleman or the lady in this tower. Oh, well, it's going up, everybody. Here we go. All right, so quick poll in the chat. Do you think we're going to be disappointed by the boat that comes by, or do you think it's going to be a pretty sick yacht? What do you guys think? We'll take a quick poll. I think we're going to be a little disappointed. I don't know, I'm getting that feeling. Hey, Monica B says, hey Tom, I miss watching the live streams, been busy with work. Oh, we are disappointed. Check this out. We had to open it for this guy. You'll see his little pole coming up, that's it. Yeah, but Monica, no problem. Always a pleasure when you join. Always love talking to you. Howard Smith says, hey Tom, hope you are doing great. Quick question, how many years have you been doing live video? I think it's been about a year now, right? I think it's been exactly a year that we've been doing these live streams. I know, disappointed sailboat. I think during the summer months, there's always going to be smaller boats coming through, but in the winter is when everybody comes down from the Northeast and especially from Europe with their mega yachts. JD Fisher, good to see you, man. Welcome. So if you guys stick around for our live streams in, let's say, December, January, whenever we're in Miami, almost every time the bridge goes up, it's a ridiculous, like, mega yacht. And I think that makes sense, right? Not a lot of people want to be in Miami during the summer months because it's so crazy humid and hot. However, this place is booming in the winter. I know, Yogi's like, I can't believe they shut down traffic for that thing. It's ridiculous. That thing was so disappointing. I had a feeling we were going to get disappointed, but anyway. Wow, check out those lightning strikes. Guys, keep your eyes peeled over here. There's going to be massive lightning strikes. So the last thing I wanted to say in relation to the Fed meeting is, look, we know that the Fed is not going to budge, okay? They're going to be very, very steadfast with crushing inflation. So I think we need to be prepared for lower than average returns in the equity market. However, I think that's going to set us up for potentially a massive, massive rally next year after we get all this midterm election nonsense solved. So I actually think this could be setting up for some pretty nice gains here. I think we just need to be patient, and I think I'm going to continue to follow Paul Tudor Jones, Stanley Druckenmiller, and Ray Dalio when he says, or when they say, don't fight the Federal Reserve. So I think we shouldn't fight the Fed, and I want to give everybody some homework, okay? Now, I know it's Saturday, so I know what you guys are saying. Oh my God, this guy's giving his homework, this guy's a buzzkill, which I agree, but I think it's important, so here we go. So I think everybody should pick up the book, The Changing World Order by Ray Dalio, okay? And the reason why I say this is because on the stream tonight, we went through quite a bit of history, right? We studied much of the history and talked about much of the history in terms of monetary policy in the 1970s and the 1980s. And Ray Dalio, in one of his recent interviews with Bloomberg, one of the things he said is that the greatest investors are the greatest studiers, or the people who study history the most. So if you want to learn history as it relates to the financial markets, not only in the United States, but around the world, I think you have to pick up this book. Okay, I think it'll give you a really good insight into credit cycles, into business cycles in general. So once again, pick up the book, The Changing World Order by Ray Dalio. If you're too lazy to actually read it, that's fine. It's available for free on YouTube in a video version. So if you type in to YouTube in another browser or something like that, look at this thing. This thing is like, things look like a tank. If you type in Ray Dalio Changing World Order into YouTube, you could actually listen to the audio recording where Ray Dalio explains the overall thesis of the book, and I think this will give you a better understanding of the rise and fall of empires in relation to changes in hard money, fiat currency, and credit cycles in general. So definitely check that out. Ryan Royals, like, if Tom says read it, I'll read it. It's a good book. It's definitely a good book. Hey, James Tiger is here, says Tom. The Fed is about to ramp up balance sheet shrinkage, quantitative tightening. See if this does anything to the markets, 90 per billion a month starting September 1st. So I believe it's actually next week, to your point. You're 100% right. So if we think all the way back to June 1st, I believe that is when the Federal Reserve first announced quantitative tightening. So to James Tiger's point, I think a lot of people get confused with the different tools that the Federal Reserve has. Okay, they think the Federal Reserve only controls interest rates or the Fed funds rate. That is correct. But I think the biggest impacting tool that they have is actually their balance sheet. So the expansion or the contraction of their balance sheet. And if you think about it, you know what? I actually think this may be a better color than the grayish color. This is like sort of navy blue on the Tesla. I like that as well. A Washington plate too. Interesting. So the Fed balance sheet is made up of mortgage-backed securities and U.S. Treasuries. Okay, so whenever we talk about artificially suppressing interest rates, well, if we think about how the bond market works, as bond prices go up, yields go down, and as bond prices fall, yields go up, right? So there's an inverse correlation there. So if you have the Federal Reserve having a constant bid on the market, so buying treasuries, buying mortgage-backed securities, well, rates are probably going to stay depressed or suppressed for quite some time. So as James mentions, as the Fed starts to allow assets to roll off of their balance sheet, well, that's going to tighten monetary conditions, or I like to call it removing liquidity from the financial system, essentially, because they're either not going to buy any more U.S. Treasuries, sell them outright, or when they mature, just let them roll off the balance sheet. So I think that's going to have a material impact. There was a very good article in Barron's, and I'm going to make sure I put this in the Behind the Street newsletter too, that we're probably not going to start to see the real effects of quantitative tightening until about December. And the reason for that is because it has to do with specific settlement dates. So even though the Federal Reserve already technically started quantitative tightening, or QT, a lot of the bonds or the treasuries that they bought last quarter are just hitting the balance sheet now. So that could give off the impression that the Fed is still continuing to buy these assets, but they're actually not because of settlement policies. So we'll talk a little bit about that in the Behind the Street newsletter. But I do think that's going to make a big sizable impact on the markets for sure. I agree. Hey, Perry is here, says, hey Tom, welcome Perry. Hey, Chris says, hey Tom, I was watching Walking Commuter on YouTube this morning and he recommended you for advice on a post someone asked. Ah, very nice. Well, I like Walking Commuter. You know, when I first started doing the live streams, for some reason everybody thought or would email me and they would say, hey, are you the Walking Commuter? I was like, no, I'm not.
Make sure that you're ready to go.
But then again, has anybody ever seen me and the Walking Commuter in the same place at the same time? You haven't. You haven't. Hey, Jared Gordon is here. Says, hey Tom, good to see you, my friend. Welcome. So we're headed towards Brickell. Alex L says, do you think the Fed will ever get into crypto? Well, I think probably we'll have a Fed coin or a Federal Reserve digital currency. I do think we will have that. I think every central bank will have their own form of digital currency. But at the end of the day, a lot of people are not happy about a digital dollar. But I would argue that we've had a digital dollar for probably the last 10 years. Wow, that was a crazy lightning strike. I mean, think about it like this. I never carry cash. Honestly, I do not remember the last time I've held a physical dollar in my hand. I don't even have a wallet. So think about that. A lot of Gen Zs now, they don't carry cash, they don't have a wallet. If a store doesn't accept Apple Pay, I can't shop there. I never carry cash. I only carry my phone. I get on the bus, I get on the subway, I use my phone to pay. So in that aspect, isn't the dollar pretty much digital already? I mean, if you think about all the technical dollars in circulation, there's not enough physical bills to meet that demand, right? Let's say if you have $10 million in a bank, you go to your local bank branch, it's not like you could pull out 10 million physical dollars. If you wanted to, it would probably take 2 months and you have to order the money. You know, a lot of people don't understand that. So I would argue that we already have a digital dollar. Much of the money we have now is all digital anyway.
Attention, vehicle exiting. Watch for vehicles.
Line Sync says, how often do card/phone payments networks go down in the US? No, it really hasn't happened. I've gone through life pretty easy with my phone. You know, I actually wrote a paper on this in college. Maybe I'll try to go back into my old laptop or my old files and I'll try to post this paper for everybody. But the thesis of the paper was that I believe that a digital cashless society is actually going to make a safer society because it will deter theft, right? If you look at a lot of the muggings, the stabbings in places like New York and other major cities across the country, what is the incentive to rob or steal from somebody? It's because if you're carrying a wallet or a purse, the attacker probably thinks that you're going to have money in there. But in a cashless society, and when there's no money and everything's digital, there's no incentives for criminals to come up and steal stuff from you because there's nothing to steal. right? If somebody tries to steal my cell phone, okay, go ahead, take it. I'm just gonna walk home, log on to my MDM or mobile device manager and make the phone a brick, right? And I think the vast majority of people now have some sort of an MDM cybersecurity product on their phone, where if a criminal ever stole their device on the subway or whenever, they just say, okay, take it. And then they go home and then they remote wipe the device, and it's essentially a paperweight. So I think as a lot of that stuff continues to roll out, I think a cashless digital society could quite literally solve a lot of the petty crimes we have here in the United States and even abroad when you're talking about somebody mugging you for money. I don't have any money. So there you go. Hey, Carol H says, hello, Tom and friends. Welcome, Carol. Good to see you. So, Carol, we were just going over the Fed Chair Jerome Powell speech at Jackson Hole on Friday. We did a big deep dive into that. Yeah, Mike C says, especially if you have Apple Care, your stolen phone is covered. So through my business Amex card, if my phone is ever lost or stolen, they literally overnight me a new phone. So if I ever lose my phone or if it's stolen, the next day, 24 hours, I get mailed a brand new one. So I think I'm actually optimistic on, digital forms of cash. I think it's going to benefit society a lot. All right, so we are now in the Brickell section of Miami. These are my two favorite buildings in Brickell. Hey, Bob says, Tom, you are in Miami and phones don't work after a hurricane when the cell towers are out. Well, now they do, actually. So I have T-Mobile. And so now T-Mobile is partnering with Starlink. So if you ever have a cataclysmic collapse or a major hurricane or a major tornado where all the cell towers are out, you could still use your phone as normal, because a lot of that C-band spectrum that T-Mobile acquired through the Sprint merger is now capable of connecting with Starlink satellites. So if you have T-Mobile and there's ever a major hurricane or a major crisis, a climate crisis, you could use your phone as normal now by connecting to Starlink. And that was actually one of my bullish theses on T-Mobile right when they were doing that merger with Sprint, because even though Sprint was a very unprofitable company, very mismanaged at the time, surprisingly they had the most important asset for a 5G future, which is a lot of the necessary spectrum in the mid-band level. So a lot of that C-band spectrum for very low latency, high throughput applications. But did anybody hear that? I think that's an interesting topic to talk about. Did anybody watch the Elon Musk, Starlink, and T-Mobile keynote speech? I think on Thursday, when they announced the partnership with T-Mobile to roll out a lot of their Starlink satellites. Two Barnacles says, love your streams mostly. Thank you, Two Barnacles. David says, not yet, Tom. It will be at least 6 months. Yeah, like 6 months is pretty much like now. But yeah, you're right. I think that's pretty amazing though. Has anybody signed up for the home internet through Starlink? Now, I think it's mainly supposed to benefit more rural areas where there's technically or traditionally not an internet connection. So let's say if you live out in middle America or something, I think that's mainly the value proposition of, you know, that Starlink internet. Yeah, somebody says the Lucid showroom, Lucid Motors showroom is behind us. Wow, somebody says they want $150 a month with $500 in equipment. Wow, that's expensive. So does anybody have Google Fiber? I'll ask that question. Does anybody in the chat have Google Fiber? Because I think Google Fiber is quite expensive too. I think it's over like $100, isn't it, a month? Hey, Grant says, yes, Tom, rural areas here. May share the Starlink with others. Many here use it in New Zealand. Hey, very nice. Yeah, so Grant is one of our viewers from New Zealand. Good to see you, Grant. Hey, Susanna Herbert says, on top of that, your streams are awesome. I learned a lot about finance. Thanks to you, Tom. Hey, I appreciate it. Thank you for being here, Susanna. I think this is a Rolls Royce here. Howard says AT&T service is expensive. So if I had to, and again, this is just saying for the sake of the stream since we're on the topic, if I had to have exposure to a telecom company out of the big three, so out of AT&T, Verizon, or T-Mobile, it would definitely be T-Mobile. It would definitely be T-Mobile, without a doubt. Where I see big upside in T-Mobile is in the enterprise space. So T-Mobile has been very, very successful and very, very good with more consumer retail type business. So you could think about like family plans and things like that. But where they're lacking is in business to business and large enterprises like Fortune 500, Global 2000, and Fortune 1000 companies. But I think as they start to hire qualified and very capable enterprise account executives, I think they're going to win massive market share from AT&T and Verizon. Check out these buildings here in Brickell. Hey, Unstoppable Saris is beautiful. Good to see you, Sarah. Welcome. Speaking of Elon Musk, here's a Tesla right here. Line Sync says, Tom, indeed, Starlink ain't cheap, but if you're away from any chance of decent landline or mobile internet, it's a solution, although it's in its infancy. Yeah, so usually that's how a technology adoption curve happens anyway, right? At first, it's going to be very, very expensive, and it's expensive for a reason, right? So they could invest a ton of money in the R&D, and over time, technology actually tends to be quite deflationary in nature. So I'm optimistic on it. I'm optimistic on it for sure. I think it's going to be a good thing for like first responders, especially if there's a natural disaster or something like that. Hey, Gabrielle says, hello, I'm new here. Welcome. Good to see you, Gabrielle. Hopefully you're having a fantastic Saturday. Hey, Lizzie Hatch says, hey, Tom, I wonder how much it costs to stay in one of those buildings per month. So one of my friends actually does live in an apartment here. A one-bedroom apartment, I think he pays like $3,300 a month, which is very expensive. However, I think there are even more more expensive apartments here in Brickell. All right, 2 barnacles. We just gotta. I can't have that kind of stuff. It's the YouTube sends me these emails. We just can't comment on anybody's like. Hey, Gene says Mary Brickell Village may be gone in the future. A tower might replace it. Yes, so I heard about that. I think somebody bought this. I'm not sure what the acquisition price was, but supposedly they're going to build massive high rises here. Gabrielle's like, Tom, it's 57 degrees here in Quebec. So fun for August. Yeah, well, Gabrielle, it was about 90 degrees and very, very heavy humidity here in Miami. So beautiful day nonetheless. I actually tend to like the humidity, but yeah, the LT Prods is T-Mobile is nearly at its 52-week high right now. You're right. David says, which is more expensive, New York or Miami? You know, I think Miami may be more expensive than New York now. I think in terms of affordability, I think we may have surpassed New York, which is unfortunate. But New York City and Miami are very, very expensive places. Hey, Lizzie Hatch, thank you so much for the $5 donation. You are very, very kind. I appreciate it. Somebody says, what are you doing in Miami? Just vacation? So I live here and I work here, but I usually split my time about 50-50 between New York and Southern Florida here in Miami. But yeah, I like it down here. It's one of my favorite places. So today I spent most of my time in North Beach, which is right around 72nd Street. Probably one of my favorite locations in Miami. Not too crazy, very quiet, very beautiful. Hey, 48 says, good evening, Tom. Hope you're well. 48, thank you for joining. So 48, we just finished doing an in-depth analysis of Fed Chairman Jerome Powell's speech at Jackson Hole. And it appears that he is not budging and that he is going to continue to put the pressure on quantitative tightening and raising interest rates. And we saw stocks sell off and drop like a rock on Friday. As well as we saw yields in terms of the bond market spike like crazy. That US 10-year Treasury yield is now well above 3% once again, putting additional pressure on equities. If anybody's looking for a good spot, so this is very good Argentine food, but I got a steak here. I went here with one of my clients. This is a very, very good restaurant here in Brickell. More Teslas here. Another California license plate too. David says, do you think the Federal Reserve has too much power to be independent? Well, no. I mean, I think that you know, and we talked about this earlier in the stream. I actually think Fed Chair Jerome Powell said all the right things today. However, I think it's a little bit of a day late and a dollar short, but I think he said the right thing. Wow, look at this. What car is this, everybody? This thing is insane. Look at the color on that. You know, I think the Federal Reserve's #1 goal at all times should be price stability, not a cheerleader for the stock market. And I think that finally they're going to take the stance to say, look, if we have to raise interest rates, you know, by 2 or 3%, you know, 300 basis points in order to kill inflation, that's what we'll do. Steve C said Huracan. I was about to say Lamborghini, but for some reason I didn't. I was going to say Ferrari, but these are my favorite type of Teslas. I think these ones open like to the sky. What is it called? Like a butterfly? I think those are my favorite ones. Those are what, the Model X, Tesla Model X? Somebody says Lambo Aventador. My first guess was going to be a Ferrari, but no, I was going to say Lambo, but then I was like, I don't know, it looks like a Ferrari. I'm not a big car guy. I'm horrible at predicting that. Kat says the Falcon doors. So I think if gull-wing doors, there we go. I think if I ever had to buy a car, it'd probably be a Tesla, but it would be the Model X. I think the Model Y is the more affordable one. Hey, Sam is here. Welcome, Sam. Tons of lightning to the south here. If you see it, massive lightning. All right, people in Miami definitely love their Teslas. This is like the 20th Tesla we've seen tonight. All right, everybody, we'll walk one more lap through Brickell. And then I gotta get something to eat. Sam Morgano, good to see you, my friend. Always a pleasure. Hopefully you guys are having a good weekend. Wow, this place looks pretty new. It says Japanese to-go market. Wow, I mean, maybe this place has been here, but I've never seen it. This place is really, really good right here. I took a client here before. This place is very, very good. David says, Tom, if you own a home, before you get an electric car, get solar panels. I was thinking about that, but I feel like the moment I put solar panels on my house, a hurricane's gonna come by and rip them all off the roof. You know, my electric bill is not too bad. It's not too bad. It's roughly like 50 bucks. And I actually have a 3-bedroom, 2-bathroom house. And I run the AC all the time. And it's only like, I don't know, $50 to $70 usually. But then again, it has been a little bit higher in recent months just because it's been so hot. And I think I've been running the, there seems to be a rooftop bar here. Yeah, David is like insurance. But that's the only thing. My insurance premium on my house is, you know, David, it actually went down, surprisingly. So I was speculating on why my insurance went down for my homeowner's insurance. And the only thing that I could find is that FEMA downgraded Miami-Dade for their flood risk. So maybe that's why it went down, but my premium went down almost $950 for the year. So it's pretty good. My property taxes, on the other hand, I just got that in the mail. And I think that everybody in my neighborhood, we're all gonna sign a petition to boycott it or whatnot. I don't have enough time to deal with it, but I think my property taxes are set to go up like $2,000. Anyway, Dr. Strange's home insurance went up 2x overall in the last year in Florida. So Dr. Strange, my homeowner's insurance actually went down. My homeowner's insurance went down like $950. Which is strange, right? Which is strange. Yeah, the LT Prods is filing abatement. I just got it in the mail literally 2 days ago. I didn't have time to deal with it, but in the neighborhood group chat, we have this signals chat where it's mostly just neighbors complaining about petty stuff. Don't tell my neighbors I said that. But they were all trying to get together to go down to the whatnot and boycott it. I just don't have any time for it. I'll figure it out. Yeah, Doctor Strange is surprisingly good for you. I think I used to pay $4,300, and now I'm under 38. So. Yeah, line sync I've been reading about a lot of that stuff in Germany. I've been seeing, hey, good to see you. How are you? See you, man. I've been seeing a lot of that stuff in Germany about how power costs have gone through the roof. Now, I don't want to get political and say why that may be, but I think we all know why that has happened. So over the past coming years, Germany didn't take wise advice from a former president of the United States saying that you shouldn't be so dependent on Russian oil and gas to sustain your economy. Fast forward a couple of years, Russia launches an invasion of Ukraine, and the price of oil and gas has skyrocketed. And Russia is playing some games saying that they have to suspend some imports of oil and gas via a pipeline. They claim the reason why they're doing that is because of routine maintenance. I'm not sure if I agree with that, but I think we already have the solution to the energy crisis, and that is to lean on nuclear power. I think if we construct and operate and even bring back a lot of the nuclear power plants we've closed down, you'll solve the energy crisis and you'll be fine. But not to get super political, but if you really want to solve climate change, you could probably solve it overnight by making massive investments into building and expanding nuclear power. David's is here, and they laughed at the guy. Yeah.
Like it's a soda water. It's like, oh, is it that fancy?
Jeff W says you fell for that BS. It's because ours was shut down on purpose. Yeah, Harry's like Japan is building a next-gen nuclear plant. So third-generation nuclear power generation is probably the cleanest form of energy and the safest form of energy, bar none, on planet Earth. So I think we should follow in the Japanese footsteps for sure. But if you guys are enjoying the live stream tonight, feel free to leave a like on the video, subscribe if you are new. Tomorrow we may not be live. It's going to be about a 50-50. I have a lot of stuff to do around the house before I start to travel, but we will be live on Sunday night when we will be doing our Markets a Look Ahead live stream, where we will be covering all of the up and coming events on Wall Street in terms of corporate earnings, in terms of economic data and the like. GX72, they are shutting down 2 of their nuclear power plants. Well, I think we shut down 2 of them here in New York. I think there was 2 main ones in New York. One was upstate, all the way upstate in Oswego, New York, that borders Canada, and the other one was actually, I think, Indian Creek. Is it Indian Creek or Indian Point? I forget. I always get them mixed up. Oh, Gregory says, isn't tomorrow Sunday? Oh my gosh, tomorrow is Sunday, dudes. I'm going crazy. That's how you know I'm going crazy. The humidity is getting to me. I thought tomorrow is Sunday. Oh my gosh, that means I really got to get cooking. That means I may not be live tomorrow at all because I got to get a ton of stuff done around the house before we start to travel. But I appreciate everybody joining. Please enjoy the remainder of your weekend. Try to get some rest so you can refuel and recharge for the week ahead, so you could hit it hard, hit it strong on Monday. I appreciate everybody joining. So Gregory, thank you so much, my friend. British Gray, thank you so much for joining. War Walker, I appreciate it. Once again, on Tuesday, we will be sending out I think it's the 20th edition now of the Behind the Street newsletter, which is a free newsletter that covers the US equity markets, emerging markets, fixed income, the bond market, all that good stuff. If you scan the QR code on your screen, punch in your email, you'll be signed up to receive that for free. And tomorrow we will be doing our Markets a Look Ahead stream if we have time. So Ryan Royal, I appreciate it. Willie, thank you so much. Andy from South Korea. Hopefully you are doing well over there in Korea. Gabrielle, thanks so much. Vinny, the LT Prod, War Walker. San Miguel, David Randall, thank you so much. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. I'm gonna say about 50-50 tomorrow we'll probably be live. If not, then I apologize. But I'm gonna really try to wake up early so I can get all my stuff done so we can do the Markets Look Ahead live stream. Everybody, thank you. Enjoy the weekend off. It's very important, very critical that you rest, recharge so you don't burn out. Eat healthy foods, try to bang out some push-ups, get a good workout in tomorrow. Be positive. Things are always looking bright, no matter how frantic and hectic the economic environment gets. Keep your head up. We'll see you tomorrow. Thanks, everybody.